This video will do a quick recap of income from salary. Let's quickly talk about meaning of income from salary. Salary is any kind of income which is derived or received because of an employer-employee relationship. Any income, whether fixed or variable, received because of an employer-employee relationship is salary, whether it may be called salary or whether it may be called something else. This salary may be received during the existence of employer-employee relationship and come in form of regular salary, or it may also come before the employer-employee relationship begins or even after the employer-employee relationship ends in the form of joining bonus or pension. Next question comes is uh, when will it be taxable? At what point of time? Well, it depends. If you're getting fixed salary, the fixed component of salary is taxed on due basis or receipt basis, whichever is earlier. Let's take an example for this. Let us say there is a practice in organization to give salary on last day of each month. But for some reason, March 2012 salary does not come on 31st March 2012. It gets delayed, let's say, to 4th of April 2012. Now, in spite of the financial year change, your your salary of March will be taxed for the previous year 2011-12 only and not the next previous year. However, remember, if the practice in organization is to pay salary on 5th of next month only, in that case, remember that on 31st of March there was nothing due which is not yet paid, and hence the taxation will happen in the next year only. Similarly, if salary is received in advance for next month, so if I receive April 2012 salary in the month of March only, then April salary will also be taxed right away. So the simple rule which we need to go by is ultimately due basis or receipt basis, whichever is earlier. Variable pay, however, does not go by this rule. It always goes by only receipt basis. When I receive, it will get taxed. Bonus, commissions, profit sharing, incentives, etc. in any form will always be taxed on receipt basis only. Now regarding payment of salary can obviously be done by cash, wherein you receive a salary slip and your salary slip shows various components like basic, HRA, etc. However, the payment can also be added on by something that we call as perquisites. Perquisites are an add-ons which an office may, which my office may provide to you. For example, let us say an organization provides accommodation for a certain level of employees, or an organization provides furnished accommodation, unfurnished accommodation, concessional loan facilities, or servants, gardeners, cooks, etc., or pays for any such things. These are all called perquisites. The perquisite needs to be valued properly and added on to the cash salary for purpose of taxation. Then we can have employee benefits like gratuity, LTA, leave salary, etc., which will be there because of your work with an organization. Now let's look at for the cash salary, uh, the various components of incomes that we have. How do we deal with each of them in tax? Well, first let's look at components that are always taxable like basic, city compensatory allowance, dearness allowance, or any such other allowance. So unless an allowance is mentioned as exempt or partly exempt, it will always be taxable, right? So this one is quite simple, nothing much about it. Then there are some allowances which are exempt with rules. For example, HRA, entertainment allowance, academic allowance, uniform allowance. For example, HRA will be exempt up to 20% of basic or 40% of basic. Let's take an example. Let us say if I receive 20,000 rupees as basic, HRA can be exempt up to 50% in